It's a virtuous cycle for banks, a vicious cycle for struggling borrowers. Why is this trend coming back? Because it was something that happened before the financial crisis.
Right. So, yeah, as you mentioned, after the financial crisis, regulators clamped down on this practice because they thought, it might not be so great for borrowers. So they made it a little harder for banks to enact proactive credit line increases, as they're known as. But since then, actually, just technology has made it easier for banks to collect income information from customers to be able to determine if someone is eligible for one of these. So they've been able to ramp up the speed at which they're offering them to people, and that's why it's made it come back. Actually, at Capital One, after the crisis, they put up these guardrails to make sure that they weren't going to be setting up borrowers to become perpetual borrowers. And, they really stuck to that for a while. The CEO called it a radical theology in banking. But then in 2017, as the stock started to plummet, they were under pressure to show revenue. They actually removed some of these guardrails just to be able to boost the program. And so now, there are tons of Capital One customers out there who are waking up and noticing my credit line was increased. I didn't ask for this. And
when people have their credit lines increased, is there pretty clear evidence that they take out more debt?
Yeah, there's a lot of very clear evidence about that. The Fed has a study that shows that for people who already are revolvers, meaning they carry a balance, 100% of an increase in line is going to result in an increase in debt. And then Capital One actually has these internal analyses that my sources told me. They knew that their borrowers, anytime they boosted their lines, utilization would stay the same. So if they were only borrowing 30% on a $1,000 line and they boosted that to $10,000, they'd still borrow 30% of that. So
what does the data show when it comes to how much borrowers are falling behind in making payments?
So, people always talk about the strength of the consumer. They say times are great. And actually, when you dig into it, even though, jobless rate is at the lowest in forever, stocks are at all-time highs. Already the share of borrowers who are 18 to 29, they're already defaulting at the highest rate in about 10 years. And then, one of the credit agencies has said that they think the rate of borrowers who are going to be defaulting this year is going to rise to the highest in 10 years. And that's as other types of consumer debt, like auto, mortgage, student loan, is falling.
So you mentioned regulators post-crisis wanting to clamp down on this. Is there anything now that's being looked at to curb this again, or is this going to be one of these things? It'll get addressed after the next recession when
it definitely remains to be seen. I don't think this has been on people's radars.
Yeah.
So
all right.
Yeah,
Hopefully.
we'll see.